Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and we're going to call today our first edition of Palisade Radio Crypto. We've got a guest on the program who we had back on in August of 2017. His name is Michael Pohl, and he's a good friend of mine. Back then, at that time, Bitcoin was at about $4,000, and the ICO market was certainly in a more primitive stage than it's evolved into at this point. I've kind of come to the conclusion that this is a space that's not coming away, and a lot of that's been from the expertise that I've garnered from Michael along the way. And I thought that it would be a valuable thing to start sharing some insights on the market as it develops with our listeners. Of course, we're not moving away from or shying away from our bullishness on the resource space and the commodities. We still think that that represents a very discounted portion of the market, and we think that's a very safe bet that remains where many of our chips lie. But Michael, on the other hand, who also is bullish on the resource space, has most of his chips in the crypto space, and he has more knowledge than anybody that I know about the space. So today we're going to talk in a bit of generalities, looking at the crypto space as a whole and seeing how Michael thinks it is developing. Michael, let's start with a very basic question, which is just what's been going on with the cryptocurrencies. We've seen this crash. Bitcoin hit almost $20,000 and it's now down to around $8,000. Are you concerned what that spells for the space as a whole?
Hey, Con. Yeah, great to be back on. So since we spoke, I think Bitcoin you mentioned was around $4,000. Had a huge run up to about $20,000, and since then we've been in quite a big correction. So I think for anyone who's new to cryptos, this correction seems quite scary. It's 50, 60, 70% off the highs in some of the coins. So if you look back at the history in the last 2-3 years, actually that's something that happens at least a couple times a year in cryptos. So it's a very volatile asset. I guess resource is also quite volatile, so that shouldn't be unusual. But yeah, it's still double from when we last spoke, so that's not a bad return in absolute returns. And the other market, like you mentioned, has been unfolding. So there's probably 1,500 plus coins at this point, and different sectors and use cases emerging that have done obviously much better than Bitcoin in that time frame. So that's the sort of sectors that we're focusing on. And like you mentioned, the ICO space and the pre-sale space is one area where you get a lot of upside. And obviously there's a lot of risks that you have to learn how to mitigate and really understand the projects out there to find the good ones.
Now, by way of introduction, I know I'm going backwards a bit here. Obviously, your accent is British, and you've lived quite a bit of time in Singapore. You're, I believe, 35 years old? 33 years old. What's kind of your background that led you into the crypto space? Certainly, nobody's had much time spent in cryptos. It's been growing so quickly and so recent that it emerged.
Yeah, it's an interesting journey. I think, I was quite a metals bug as well for a long time, and I'm still very bullish on metals. I think that the way I viewed gold and silver was as a hedge to the financial system. So just since 2008, when we had that big bank collapse, and I was actually working in Barclays in London at the time, so I saw, the guys at Lehmann carry the boxes, and I think that for me kind of sparked my interest to really understand what is this whole money system we're living under, and realizing it's not very sustainable in the current model because it requires, constant inflation and growth. So I didn't really understand cryptocurrencies that well at the beginning, that it was really a solution to a lot of the problems we have until more recently. And I think when it was just Bitcoin, it's arguable that it's going to be sustainable. It could just be a fad, could just be another digital cash that gets wiped out. We've seen a few of those. And then obviously last year when the whole market exploded and a big ecosystem, a lot of talent coming in, a lot of capital coming in. And then the last few months has just been crazy with the amount of institutional money, people leaving Goldman, Wall Street, some of the big organizations like Google, Facebook to start these crypto companies. You realize there's, a massive industry here. So I became a lot more bullish and really dived in to understand the emerging blockchain technology, how it's going to disrupt these industries. And I think disrupting finance and money was the first sort of use case that was obvious to me. But now I'm seeing there's tons of other industries and sectors which will obviously benefit from blockchain technology in terms of optimizing some of the cost wastes that we see, all the middlemen in different industries. So it's not just finance.
So as the Bitcoin price was running up, most people were focused on Bitcoin itself or just the cryptocurrencies. The public wouldn't realize that there's actually other components to this whole crypto economy and all of the different utilities that come out of the various platforms that are being built. I don't think people have an understanding of how much of it works, myself included. Can you kind of explain the different levels in very broad terms? You have the currencies, and then you have things like Ethereum, and about 19 other platforms you were telling me about, where people can actually use those platforms to build tokens and then securitize things, and then you have companies that are raising money on these platforms.
Yeah, so there's a bunch of different sort of use cases or sectors emerging. I think Bitcoin, most people understand that as, a form of currency, and it's really changed actually its use case because it's no longer so quick and so fast or cheap to send. So you wouldn't be paying for coffee with it anymore. And people kind of criticize Bitcoin and say, oh, you can't buy coffee, it's too expensive. Blockchain's useless. So I think it's kind of losing sight of all the other coins out there. And I think there are coins now that do microtransactions much better. So you have Litecoin, Dash, Monero, which are all pretty fast and pretty cheap to use. And Bitcoin's, use case is more like a digital store of value, much like gold. You can settle trade in large quantities, but you wouldn't pay for coffee with it. So I think, apart from the currencies, there's some very interesting sectors, platforms emerging. Like you mentioned, Ethereum is probably the one most people are familiar with, and that's, number 2 now by market cap. So it's about $50 billion now. You have a bunch of other ones behind that, growing really fast. And the biggest sort of challenge is obviously the speed and scale, because Ethereum, I think, only handles up to about 10 transactions a second, which is not enough really to support production grade financial applications, for example, like Visa and MasterCard process millions of transactions per second. So there's a bunch of new ones coming out now, EOS, Neo, Cardano, Icon, all in different sort of geographies, different ecosystems and teams. And if you look at the top 20, 30 coins by market cap, you can go to coinmarketcap.com as a good resource. And you can start to understand the different sort of sectors and use cases emerging. I think the platform protocols really have the most scale, because you could invest, in an ICO that's like an application. And if that's really successful, it might have, a few 100 million users. But you could invest in a protocol that's going to have a few thousand of those apps running on its blockchain, and that's obviously going to have a lot more scale. So that's tends to be where I focus, initially, and then you can drill down even, smaller sectors that have more upside, that are solving a problem that you understand. So, behind Ethereum, you have EOS coming out soon with its blockchain. Neo is a very exciting project in China. Cardano is the same in Japan. Icon in Korea. A lot of these projects are in Asia, which I'm very bullish on generally, because blockchain is just a way of transferring economic value. I think I've talked to you before in private, about how bullish I am on Asia. They have the manufacturing, the demographics, the real wealth. So I've been out there a lot, since 2009. I've been in Singapore and been traveling around. And as cryptocurrencies and blockchains have really taken off, I've taken some trips to Seoul. It's got the highest crypto adoption rate in the world, and really interesting to kind of see the cutting edge, how people are treating it and using it as real money. It's a very different mindset from the West in some regards. So I think that the East is really embracing this much, much faster.
I always think that technology has a way of outpacing government, and even if government has a good idea in theory, it often doesn't work until the real world or the free market decides to do it. A couple of things that came to mind the last few days as we've been spending a bit of time is, for example, crowdfunding. That was something that the U.S. government tried to regulate about 5 years ago. Intentions were probably good. They wanted to open up the field of investing to more people so that it would spur industry and growth, but of course it became overregulated and it never took off. Crowdfunding on a basis of like a Kickstarter, obviously a big thing, but I'm talking about the security side of it, just never took off. Maybe something more close to home for my listeners being the need to be an accredited investor in Canada eliminates the ability for 98% of Canadians to actually participate in these financings. So, if you look at the real world scenario of what these platforms are unlocking, they're actually allowing people to have more freedom, more individual connection, more abilities to decide what they think is useful. And I think that that's always what ends up kind of moving things forward if you look back in time. What's kind of your thought there, not to get too philosophical on it?
Yeah, I think, financial regulation has a place, and obviously governments you can argue they're trying to protect investors. I think a lot of the rules are kind of designed to protect the status quo. So when you look at, the emergence of the crowdfunding and as it relates to ICOs, these are essentially not securities. The way that companies are trying to classify them are as utility tokens. And so it's a very kind of gray area, because you can argue a lot of tokens are securities. And if they are, then they kind of fall under existing regulations. So utility tokens are basically designed to be something you need to use the platform. So you're kind of prepaying for services, and that, is not really a security in that classification. So that kind of gets around the existing financial regulations. Obviously, a lot of countries still aren't happy with that. So, SEC is issuing guidelines saying it considers most token securities. And I think that, that is causing a lot of problems for U.S. investors who want to get into the space. A lot of ICOs now are not letting U.S. investors or Chinese investors or South Korean investors get involved with these projects because they don't want the governments coming after them. So that's actually disenfranchising a lot of people who want to get into the space. But there are still lots of opportunities. And I just think it's very early on. We're going to see a new wave of security tokens and asset tokenization come out. So that's actually pretty exciting for the metal space and resources. I think commodities and mining is one industry that's going to be really disrupted, and we haven't even seen the beginning of that yet. So what we've seen so far is more of the utility tokens, these applications being built out on Ethereum blockchain, and I think we're moving towards security token exchanges like Polymath, T0, that are essentially going to allow you to issue financial instruments on the blockchain, and that's going to transform ownership. Some really exciting projects coming down the pipe soon.
Let's dive a bit into your day-to-day business and what you do, and use that as a way to explain how the security side of the crypto world works. So a lot of people listening to this probably have very little idea of the difference between something like Ethereum and Bitcoin. Bitcoin you've explained as a store of value. Maybe compare it to gold. It's just a way to hold something in crypto form. Ethereum is actually a platform, as is EOS, another one you mentioned, or Neo. And it allows people to actually build a business, tokenize that business, similar to like if you're listing on the Toronto Stock Exchange or the NASDAQ, raise money, and then be able to do everything like trade that between people or access capital or so many different things even beyond that. But maybe try to break that down in simple terms.
Yeah, sure. So I think you probably want to differentiate between the legal distinction of a security and then the technical definition of what these platforms can do, because, there's kind of two different things. So if you look at Ethereum and the kind of use case emerging in those platform protocols, what you can do with Ethereum is you can basically build in smart contracts, which is just like programming code. So it's like programmable money. And this is something Bitcoin you can't really do with Bitcoin at the moment. So when Ethereum came along, and obviously it opened up a whole new, ecosystem where a bunch of entrepreneurs can come and create these applications and basically program everything through the code, that you don't need middlemen to kind of be the broker or the clearing party. And that's kind of the promise of, cryptocurrencies and blockchain technology. So Ethereum is kind of the first mover advantage. That's been around the longest. It's the most tested. And really now the way it's used is almost it's like a funding currency. So there's a bunch of investors out there who have made a lot of money with Ethereum, and you can actually use your Ethereum to fund projects. So they will say, you give us Ethereum, we'll give you these tokens that represent, access to our platform. And obviously a lot of people are speculating these tokens will grow in value as these platforms grow in adoption. So a lot of it is really just like the dot-com boom, where we're speculating on future growth and everyone's trying to kind of understand what's going to happen, how's it going to unfold. I don't think anyone can really say with certainty that, Ethereum is going to be the dominant player. I think we're seeing a lot of really good competitors come out that, can challenge on multiple fronts. And obviously, in countries like China, where they like to really control their industry, they're probably going to go with a homegrown solution like Neo that they can really regulate and make sure it's compliant. So I think there's going to be a lot of room for multiple players, and I think that it's just so early. So it's good to really inform and educate yourself. Don't get too attached to one coin or one position. I actually don't invest much in the top coins just because they've had a lot of growth. So a lot of the new money, the dumb money coming into the space, it doesn't really understand what it's buying. It's just looking on CoinMarketCap and just kind of buying the big coins they recognize, Bitcoin, Ethereum, Litecoin. I think these coins will all do well, especially compared to other asset classes, but there's very, very exciting projects with much smaller market caps, and I think they have a lot more upside. So I guess it's very similar to buying like a blue chip mining stock versus like a junior exploration share, for example. And I think that that's the space I focus on mostly. ICOs is the really extreme version of that, where you're buying companies at the very beginning. Some of them don't have very proven business models, and they're you're speculating on the team's ability to execute and actually deliver on what they're promising. So that's where you're going to have a lot of high failure rates. With startups, and anyways in the tech scene, the startup rate failure is very high. And when you add blockchain or complication of technology that's emerging to that, I think the failure rates can be very high. So part of what we do in the group is really researching and filtering out the best projects we think have a good chance, and then trying to find the best deals, much like pre-IPO, investing at a discount to hedge your risk and maximize your upside. So that's a big part of what we do.
I think that there's a bit of a perception that all of these things that are being funded are directly related to crypto and blockchain, and so it's like this close-knit community that's building a fairy tale world but not actually applying this capital to real-world problems. I don't know if you can think off the top of your head of kind of like a couple ICOs or situations that you've seen just in the past month, say, where things are getting funded to the tune of millions of dollars that are actually tackling real-world problems, or things that a normal investor who would invest on the NASDAQ can relate to, because as soon as people wake up to the fact that there's money that's accessible, it's being directed properly or better than on a normal exchange, and the exchange actually works efficiently, I think that's when the kind of like retail money or the real world is going to fully adapt to the system, and people will flow in. So is there anything you can kind of think of to relate to our audience?
Yeah, I mean, in terms of practical technologies, I think that there's so many technologies emerging as well. So it's not just blockchain. You have artificial intelligence, you have Internet of Things, cloud computing, 3D printing, space exploration. So there's really a whole new world of technology, and it's very futuristic. I think we're in the very infant sort of stage of some of this emerging tech, and so it's hard to see where it's going to be in a few years. But absolutely, I think blockchain technology is emerging from not just something you see online, a bunch of coders working on a platform, but something that can actually be applied to the real world. So I think just the fact that you can settle trade much quicker, much faster, much more efficiently, that opens up, global commerce way beyond the current fiat systems where you have politics come in, delays in settlement times, obviously, bad conversion rates when you're sending from money from China to New York, for example. So I think all those issues are going to be something that blockchain is going to address at a financial layer. And then obviously in the physical world, you have some very interesting projects like decentralized autonomous vehicles. So everyone kind of knows that Uber and Google are working on self-driving cars, but the mechanism where the value is transferred, essentially, there's still huge middlemen there, and I think Uber charged 35% on average of the average fee, the fare. So when you're doing something with blockchain, you can essentially strip out a lot of that waste and pass that value back to the actual user of the platform. So there's some very interesting platforms coming out that are going to compete with some of these big players, and I think it's very hard for the bigger companies to disrupt themselves. So like Google to adopt a blockchain is going to require them to give a lot of control and power, and I think they're all kind of looking at blockchain technology to see how they can use it, but they never really want to give it that control and power. And it's the same thing with governments. It's very hard for them to self-disrupt themselves, and so that's where it makes room for the smaller players to come in and just be more nimble, take more risks, and open that up. And obviously the token crowdfunding model essentially is where you're giving ownership up to your users. So they're essentially your shareholders. They have a piece of your platform, and they will get rewarded, for being the early adopters, because the more people that come onto the platform later, obviously the more demand there is for that token. That's going to drive up the price, and then having got in early, that's where you kind of see the benefits of getting in that the early upside.
Just kind of relaying something that I've seen in the resource world that I thought had very good application, something that we in fact just invested in called Blockhead. The concept is, in the space of cobalt, there's a huge problem with child labor and illegal mining that's happening in the DRC, which represents about half of cobalt production. And the idea is, if a company like Tesla and Elon Musk want to only be selling cars that are not being used using child labor laws, they have no way to track a commodity, because a commodity is a commodity when it goes down to the very basis of it. And without using a system like blockchain, there's no way to put accountability into the system. The same problem that we have with the blood diamonds in the past. And so we'll see. The technology has yet to see if it's going to be adopted and if it will prove valuable, but a perfect example for a resource investor to look and say, okay, this is something that has value if it works, and it can. It's actually going to be listing on the Toronto Venture Exchange to access funding, but of course they also have the ICO market open for them at some point.
Yeah, that's a really interesting use case. I think that supply chain technology in general, there's a lot of sort of middlemen and fees and hops, and a lot of it's not very transparent. There's a lot of waste and inefficiencies. So that's an area, a sector I'm really bullish on. Some interesting projects in that space. Outside the resources, you have VeChain as an example, and they're focusing on the supply chain and luxury goods. So like handbags that are, copycatted and distributed around China. You don't really know what's an authentic Louis Vuitton or a fake one. So using RFID tags and blockchain technology, you can actually, track back all the way to the original, manufacturer and ensure it's a legitimate, genuine edition. So this is just an example. It's happening in many industries, in shipping, logistics. There's just every industry you can think of almost has an application where you can make it more efficient. You can get rid of a middleman. And the example you gave was a good one. You want to ensure your supply chain is not breaking the rules, and you feel better, obviously, if you're buying from someone like that. So I think that's a great use case, and I think that the asset tokenization model that we haven't talked about yet, I think that's a whole new space emerging. So I think that's going to be more relevant to commodities and mining in general.
Well, since you brought it up, Michael, why don't you fill us in on what you're seeing in the asset tokenization space? Yeah,
so we talked about this, I think, maybe last time, but generally, you can break down this whole ICO space into utility tokens, which is what we've seen so far, and then you have security tokens, which essentially represent actual ownership of a financial instrument. So this is a space that's a lot more regulated, but I think it's especially interesting to the resources space because you have a lot of assets that are not very liquid. And so, a mine is a perfect example. You've got to find someone who's going to finance you to explore and produce the goods from that mine. And it's not always very easy to do so. You're very limited by who's going to lend you the money and that sort of capital and for long enough and to make it affordable, to take it forward as a project. So I think what we're going to see is that liquidity is going to be opening up a lot of these industries. Real estate is another one where just not much liquidity in the space. And in many industries, you're relying on the banks. The banks can't lend, so no one can buy. And I think that opening up that liquidity, fractionalizing those assets, so you can have multiple people essentially owning a piece of a gold mine or a piece of a house, I think that's going to allow a lot more liquidity to enter the space and really utilize, and people can find capital much easier, than having to go through a bank and obviously the higher interest rates that might go with that. So we're very, very early in that stage. I think we're going to see some interesting projects coming out this year. There's a hotel that's being tokenized. I think that's getting launched in the next few weeks, and a lot of speculation around, other sort of industries that are going to follow that model. So I think we just need one or two pioneers to kind of break some ground and obviously figure out the compliance and the regulation issues around that to the regulators' satisfaction. Once we see that, I think we'll see a flood of money into the space just because it is a more efficient model and it does open up liquidity, especially in liquid assets, like real estate, like gold mines, for example.
Excellent. Well, I've been saying, if you go back since the beginning on any discussion I've had around blockchain, that philosophically speaking, I'm all for it. I really think that the less control that some centralized either government or exchange or anybody has on people, the more free the world becomes and more individual decisions get to be made, and we move towards a better world. And the promise of blockchain and crypto is that is a real possibility now, and it's moving very quickly. On an investment basis, I initially must admit that I had discounted the space, especially you see an asset price like Bitcoin get so much media attention and have such parabolic moves that it rings of a bubble, and people are comparing it to something like the tulip bubble that happened. There's really no relation because tulips don't have any value, and it's pretty clear that blockchain and Bitcoin do. So I'm really starting to grasp this and see that it's going to be something real. And like I said at the beginning, I thought this would be very valuable to get Michael on if we can get his time and share his insights. And we might make this into a bit of an installment where we're doing this on a weekly or monthly basis. Of course, any comments that people have, if you like this or don't, or if there's certain questions you want asked. Fortunately, I do have good communications with Michael and access. Now, Michael, you run a group called the New Money Mastermind on Facebook, which essentially is an educational group, and you're also sharing ideas about deal flow on there. How do people, if they're interested, get in contact with you to ask you questions or get more directly involved with what you're doing?
Sure, thanks. So there's a Facebook group and a private Discord group. We're going to be building out a platform that's going to be totally private, so I think it's really important to maintain user privacy, and we don't discuss, obviously confidential deal flow on Facebook. It's a good platform to bring engagement together. We're trying to get more of a community as well, so it's not just people online. We're going to have more meetups and events as well to bring people together in this space, just because I think in our personal lives, we don't really know many people in this world, so it's hard to have these conversations, and it's nice to meet other people. We've been in Puerto Rico here for a couple of weeks. There were some really good conferences, so I had about 10 or 20 of my group all come, to the conference. We all could meet up for the first time and hang out, and that was really fun. So I think we're going to do a lot more of those sort of meetups and events. I'll send you a link to the Facebook post I wrote about the group and how you can join there, and there'll be a website up soon as well, so we'll put some links in there. But yeah, essentially, check that out. If you have any questions, you can post on the comment page here on the video when it's posted up, and I'll check that as well. And yeah, that's the best way to get in touch.
Excellent. Well, I know that most people probably don't know the name Michael Pohl. I think that could change very certainly over time. And just to give you kind of an idea of the level, there's over 200 people in your group, and in dollar terms, just millions of dollars coming through to ICOs on a monthly basis. So this is a very formidable platform that's being grown, and Michael is at the forefront of this industry, and we're happy to have him on. So Michael, thanks so much for coming on the program, and we'll do this again soon.
Great. Awesome, Colin. Looking forward to it.
think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?